All right, Ken Orange Theory Trader back with a video just reacting to some quotes from Stanley Druckenmiller. So, who is Stanley Druckenmiller? For those who don't know, he is a legendary macro investor. He's known for never having a losing year while he was at Deuce. I don't know how to say that. Capital management, that D word you see there. Sorry, don't know how to say it. But in any event, he's known for sitting tight, okay, and taking large concentrated positions. And his one of his claims to fame is actually from a forex trade, believe it or not, where he shorted the pound along with another guy, George Soros. They made over $1 billion on one trade, taking a large position. For anyone who's curious, this is the trade that they took. It was back in 1992. This is a daily chart of the pound. So you see there were somewhere noted where they sold, and then noted where they got out, and they kept right on falling. But that trade right there is how they made a bunch of money in a few days. So there you go. Now, the quotes. Here we go. The first one. So what we're going to do is take a look at some of the quotes and see if we can glean something from them, because obviously we're not billionaire hedge fund managers, but can we take something out of the way they do things and make them fit a smaller scale of our own operation? So for his first quote, it's not whether you're right or wrong that's important, but how much you make when you're right and how much you lose when you're wrong. I really like this quote because I know that it's often taught that, okay, you have your 1 to 2 risk to reward ratio, or your 1 to 3 or 1 to 1, whatever, and all that's fine. There's nothing necessarily wrong with that. The thing that's more appealing to me, though, is that if you can find a position where you can minimize your downside and maximize your upside, why cap your gain at 3 times your risk if you can make 4 or 5 or 6? And typically that's done by scaling in or adding to the position while also manipulating the stop. I hope that makes sense to you. So having small losses and big wins to me is more attractive than having small losses and moderate wins, if that makes sense. So that's just me, though. You don't have to believe that, but I like the possibility of getting a big win on when I'm right, and when I'm wrong, which is more often than I'm right, just taking a small loss, no big deal, because I know the big win is right around the corner. Next, the first thing I heard when I got in the business not from my mentor was bulls make money, bears make money, and pigs get slaughtered. I'm here to tell you I was a pig, and I strongly believe the only way to make long-term returns in our business that are superior is by being a pig. Now, the key word here is superior returns. And so when you believe that you have a good trade, let's say for our trading system, the candle range theory, I mean, I've seen some candle threes go as high as 500 pips. So imagine setting a take profit at like 50 pips and the thing goes to 500. Now, would I try to get the whole 500? No. But at the same time, don't cap your upside. I'm really liking the idea of always, of course, having a stop loss, but leaving the take profit open, because when you get a good candle three, there really is no telling how far it can go. So why not just ride the wave? So, but some of that again is about being a pig. But the main thing is you still want to cap your downside. You never let your losses get out of control, and let your winners run. Let the market tell you when it's time to get out, instead of, well, here's my take profit and that's it. So that's that. Next quote. I like putting all my eggs in one basket and watching the basket very carefully. So sometimes I'll take one trade at a time. Sometimes I'll have three going. I like this concept. It is easier to manage one trade than having multiple positions on multiple trades. But I like this idea of, if you see a solid candle three setup and just putting all your energy into that one trade and just watching that and just forgetting all the others, you have to be okay with possibly missing a trade on a different pair, but you never know how far that one trade that you're in could take you. So I have no problem with that quote at all. But can you diversify? Of course you can. The way to build superior, again, keyword superior, long-term returns is through preservation of capital and home runs. That's really just another way of saying, though, like you said earlier, small losses, big wins. So we don't have to beat a dead horse on that point. Next quote. Earnings don't move the overall market. It's the Federal Reserve Board. Focus on the central banks and focus on the movement of liquidity. It's liquidity that moves markets. So this really resonated with me, because when you understand the idea of what a liquidity sweep is, and knowing that markets only move where the orders are, it really does change things. Now, for me, a sweep of liquidity is just as simple as when candle two closes and you're expecting candle three to take off. So liquidity doesn't have to be a complicated idea or something that's so mystical that you have to draw all these indicators on your chart to try to figure out where liquidity is. Below old lows, above old highs. That's pretty much it. So be you trading a weekly chart, a daily chart, or a 4 hour chart, we always look at candle two as a sweep of liquidity, and then we hope, again, hope, we don't know for sure, that price just reverses after candle two is done. So yeah, definitely though. Next quote: diversification is the most destructive, overrated concept in our business. So I like this because, see, I'm a Forex trader. I know some people trade futures, some people trade stocks. I am a believer that you should stick to one thing. If you're all in on futures and candle range theory does work on futures, do that. If you're all in on crypto, candle range theory does work on that, do that. I like Forex. I'm not going to futures anytime soon. I just, nothing in my mind beats Forex. It just doesn't. So it is what it is. So I don't diversify in that aspect. So I focus in on Forex. I focus in on candle range theory. And every day with every video, I'm attempting to drill down on that concept of going all in on one method of trading and trading one market, which is the currency market. That's it. So I don't diversify. I don't try to do stocks. And no, I got Forex. I'm good. I'm satisfied. I got candle range theory. I'm good. I'm satisfied. That's it. So why diversify if I'm trying to be an expert in a field? I want to be a specialist, not a generalist. So I really like that quote. And I believe this is the last one. I always believe that the markets are smarter than I am. So yeah, definitely. This comes into play whereby you don't argue with the market because the market is never wrong. It just is. Okay. I know some people like to personify the market. I don't do that. It's not a living, breathing thing. It's not an idol. It's just lines on a chart. Okay. So we keep in mind though that all you're doing is just reading price, and when you're wrong, it's okay to be wrong. So it's really not about the market being smarter. It's just recognizing what's happening and accepting the fact that you could be wrong if you take a trade. Just because you take a trade doesn't mean that you're supposed to make money. If anything, approach the market with, I put a trade in and I'm probably going to lose, but if I do lose, I'm going to lose small. And that's it. If you adopt that mindset, you'll be okay. Instead of, when I approach the market, I'm expected to win big, because that right there is how you're going to destroy your account. So I'm not going to say necessarily be shocked when you're right. It's just when you approach the market, just stick to your plan. And you should always plan to lose just a little bit, a fraction of your account, maybe 1%, maybe 5%, whatever your risk is, 2%. Okay. When I'm wrong, I'm only going to lose X amount of percent or X amount of dollars from my account. And that's it. And if you adopt that mindset, I promise your time in this game will be much longer than someone who's approaching the market thinking, I'm going to win big, or today's my big day, or this is going to be the trade that's going to, get me out of debt, or this is going to be the trade that's going to pay my rent this month. No, that's not a good long-term strategy, because if anything else, like I said, if you're going in thinking you're going to win every single time and win big, when those losses start to stack up, and they will, you'll learn that that's not approaching the market with a attitude of humility. That's really approaching it with foolishness. So I appreciate you watching. I hope you got something out of those quotes. Please like and subscribe. I thank you for your time and attention, and have a great rest of your day. Take care.